Very good morning to you. Let's talk to Malcolm Graham Woods. I've known Malcolm for a very, very long time now, and we're going to talk bucket lists. We've been doing this for a good number of years. Malcolm, very good morning to you. Happy New Year to you and your family.
Good to see you, Moose.
Right.
Nice to be around.
How many years have we been doing this?
I think this will be the 7th.
Okay.
We started in the previous crash in the teens in 15, when we needed to have, when the oil price was low. And leading fund manager in the mining area wanted me to put together a list. As a miner, he knew that the commodity would be up and down, but he didn't know much about oil. So we picked a list, and it was a great success. You know,
Yep.
you had to be up 700% to be in the top 5, and but it was intended to be a sort of buy the whole thing, as it were.
Yep.
Because that's what it's all about. And nobody does that nowadays. But that's the reason why we've got some oil, some gas, some UK, some abroad, some with a yield. And we always have one or two highly speculative stocks in there, which the whole stock is probably dependent on one well coming in, and usually doesn't. Last year it was Bahamas oil, petroleum, which was dry. So,
But that is so it is a portfolio, multi-risk, but the important thing is some of it is call option money.
Absolutely. Yeah, there are 1 or 2 plays there which, if they have a bad well or something doesn't go right, it'll be nothing to do with the oil or the gas price. It'll just be because, but some people do want one. You know, I mean, they want to play on a well or something specific.
Okay, so my first question, obviously, Crude started and ended 2022 thereabouts the same levels as did natural gas.
Yeah.
Can you see that sort of outcome for 2023?
Probably not, but you know, you can never guess. But I mean, you know, it was the ultimate irony was that crude oil started the year, you know, $85, got up to 130 in the beginning of the Russians and the Ukrainian situation, and then idled all the way back down and finished almost exactly the same as it started on the year. And UK natural gas, which was, you know, 180 pence a therm, went up to 700 odd.
Yep. And
came all the way back to where it was as well. And the 2 peaks were different. The oil peaked in sort of March, April, whereas natural gas peaked in June, July. But, you know, I could be doing myself out of a job in a sense because, you know, if you were that smart and you could see into the future, you'd have sold the whole portfolio in the summer.
Okay, so let's talk about the winners of 2022. So obviously some people are sitting on massive gains. Can you give me the top 5 winners that you selected?
Certainly, Chariot was the best. That was up nearly 150%. Chariot has two wings basically. One is the really big discovery of natural gas just offshore Morocco, and that's moving ahead fast, and we'll expect to see that quite soon. The big plus about Morocco is that very, very high natural gas prices. They don't have very much of their own at the moment, and they don't get it from Algeria anymore. And so the domestic demand is high. And also they've got a big pipeline which goes up through Spain into Europe, so multiple markets. And a great government who have very, very lenient fiscal policy. You don't pay tax. You don't pay tax for 10 years. And the other side of it, with the new CEO, the new temporary CEO is a leading expert in mining. And he's started building a part of Chariot which will, in due course, bring renewable energy into mining. Mining uses a huge amount of energy, and if they can do that by renewables, it would be great. The market's seen that. It's a small part of Chariot at the moment, but I think it's growing fast.
Understood.
Secondly, Union Jack. Union Jack was up 130%. When we closed it off at sort of 20-something, 29p, but it was 60 at one stage during the year. So if we'd stopped in then, that's because of Wrestle, which is their UK onshore field, and it has been absolutely gunning the production. Every month it gets more and more. It tends, it just spewing out, no water, and easy coming to go. Just so it's produced a huge amount of money, and that is meaningful because for Union Jack, who
Yep.
who didn't pay any dividend or distribution before.
Yep.
They've now announced a first ever dividend and a share buyback.
Right.
So speaks for itself. Third one is Petrotal. This is a well-followed stock in London, but it's a Peru stock, and as such, it has problems that you would expect to get with a South American stock.
So political risk.
Yeah, political risk, all the things that go with it. But it's been jacking up their capacity, so they can now do over 20,000 barrels a day. They had a presentation in London last week, which I was at, and it was heaving with people. It's very popular. Shares were up 100% on the year. Again, a locker away. Predator was fourth. Predator is my sort of ace in the pack or joker, depending on. They are drilling as we speak. They're drilling a hole in Morocco. They're convinced it's gas, and there's nothing to show on the seismic that it isn't. And if it comes in, I mean, they've got a huge amount of the risk themselves. Shares, probably be at the top of the list for next year, straight away. I can't call it. It's Paul Griffiths who runs knows the market inside out. They've got two other businesses in Trinidad for enhanced oil recovery and in Ireland, but at the moment the market is just literally looking at this one well.
Understood.
And finally, in the top five, we have Wentworth Resources. Yep. Wentworth accepted a bid for the company just before the end of the year at 32.5p. Very well run, in Tanzania, doing all the right things, which is why somebody thought they would like to have it more than them. So they came in. So you had to be in something that was really big or bid for to be in the top five last year.
Understood. Okay, so let's talk about the stocks that have left the bucket list from 2022 into 2023.
Yeah, we lost 5 stocks. We lost Orcadian because it started running behind. I thought it would be up and running and in the market and doing stuff middle of last year, and that was well delayed. Lots of opportunities in the future, but that's taking much longer than I thought. Advance Energy, which drilled a hole. This was one of the big potentials for last year.
Yep.
Had an 85% chance of success on the Buffalo well, and it was dry.
Yep.
So that comes out. Longboat comes out because although it's one of my favourite stocks in the whole world, run by its absolutely top team of people, but they announced they did quite a lot of drilling last year, which they're assembling all the results of at the moment. But they have said they won't be drilling an exploration well until the second half of this year.
Right. So
there's no point in having it in until we reassess in June. And Wentworth will leave because of the bid.
Yep.
Assuming that goes through. And Savannah will leave for the time being because it's suspended.
Yep. Okay, so let's move swiftly on then to 2023's bucket list. Now, this is a group of stocks, Yield International UK. Let's kick off with the UK stocks.
Well, in the UK stocks, we've got Jersey Oil and Gas, which has been a favourite, a perennial favourite because it's very well run. It's sitting on a potentially huge asset. I mean, in terms of, and this is in the North Sea, it's called the Greater Buchan area. And Buchan has had form as being a successful oil field before. But in terms of ready to drill and almost ready to go, Buchan is probably one of the top 3 potential fields in the whole of the UK, possibly quite higher. They're in the process of farming that out at the moment. I'm convinced they're going to do a deal there. So that happy with that one.
Okay.
We're looking at Serica again. Serica, which was 90-odd% gas last year. So June would have been, I think the shares were 400 or what it was, and they've come down sharply. But it's still a very good company and in good nick. And they are in the process of buying a company called Tailwind because they want to be away from 90% of gas. So they're buying an oily company, which would probably put them 60% gas rather than 90% or even less. And that one's still going to be all UK. IOG, which is Southern North Sea Gas,
yep.
Did very well to begin with, because they brought on that southern North Sea stuff very, very quickly. It did very well. I mean, no one could have done as well as them by getting it to the market. But it's a new set of challenges, and they did have some operational problems. I think that there's still only operational problems that can be sorted out. So I'm still very happy to keep them in the list.
Understood.
Union Jack's the last UK stock which we talked about.
Okay, international stocks. Start off with Kistos. I don't think I've ever heard you say a bad word about Kistos and the management.
Well, no, I have very little bad to say about Kistos because excellent management run by Andrew Austin, who's got form from Rock Rose, which he brought to the market, and it got taken over for a huge premium to what people originally paid. He goes in and does acquisitions, boldly where no man goes before, and succeeds pretty much all the time. The downside is that in this very short term they've had like a lot of oil companies, had a kick in the groin from the taxman.
Right.
We've had the windfall tax, which has hit people, some people more than others, and unfortunately, Kistos are involved in Holland as well, the Netherlands, and they've potentially brought in a new tax, so they're being hit by two different taxes, but they've got great assets in the Greater Lagan area, and in Holland they'll do remarkably well from those. They've got lots of upside. I don't think the tax will be too much of a problem, and I expect them to kick on. Probably not a bad thing not to do too many acquisitions last year while they sorted things out, but I'd expect them to be well up there.
Understood. Zephyr.
Zephyr's pretty much a favourite of mine. Last year, Zephyr was top.
Yep, I remember
it was about 800% up.
And the share price is still 6, 7, 8 pence.
Yeah, it is, and I expect it to be higher. It's moved up in the last couple of weeks because they've announced the first well from this program at their acreage in Utah, which is called the Paradox Basin. I think that will be a huge basin of hydrocarbons. And other people, over the next 2 or 3 years, other people will fight their way to get into that. That's got absolutely first-rate management. Colin Harrington and Rick Grant know how to run a business. They've carefully, done what a lot of companies never did when they found oil. They've carefully spent money building up a non-operated base of oil coming in from the rest of the states. And so they're getting paid. They're fully funded for the Paradox Basin. So it's quite smart when you get a bit of income in instead of, the thing to do is to do what they do in the States, particularly is just go and find a bit of low value, low cost.
Yep.
But it gives you the right to be paid for. So that's good. And another one with, I was going to say impeccable management is, Jadestone.
Right, so I don't know a lot about them.
Right, well, Jadestone, in operating in Asia and so on, absolutely brilliant management, and it wasn't their fault. So, Governor, the dog ate my homework. They had an oil leak at Montara. You never get away with that. It completely carted their performance for the whole year. And they were lucky to be, even Steven at the end of the year. But they've taken their medicine like a grown-up. They've fixed the leak, and I'm expecting that to come back on any time now. Memory serves me correctly, it was about June of last year. So they've lost one of their best assets for 8 or 9 months. Right. Management has been having to spend a huge amount of time concentrating on fixing things up. They must have driven them absolutely bonkers because they're a good company. They've got a great team of people looking at rocks, people looking at acquisitions. I have absolutely no hesitation in putting them back in or keeping them in this year because it's a great company, Jadestone, and they will have been as cross as anybody that it happened on their watch.
Understood. Predator, we've covered that.
Yeah. Touchstone. Touchstone is really important because this one has made the discovery. So, you will know as well as I do, sometimes you've got an exploration plan and you go along and you find something and everyone goes mad. Thank you very much. And But the old phrase travelling is not sometimes as good as arriving. So when Touchstone made their big discovery in Trinidad, it went up massively for a little while. And then people realised that it's going to cost you money, time, resources. You've got to build the whole firm up in order to develop this. So we're talking about Coho and Cascadura here. Coho's underway already. Cascadura, which is their really big play, I'm expecting that to come on stream quite soon. When that happens, they'll be able to spend the money developing out the rest of the acreage, and it's very good acreage. The moment I saw Ortois on the maps in the office several years ago, I thought that's going to be good. Really happy that Touchstone could be one of the big stocks of this year.
Okay. So, Malky, let's talk about 3 stocks that are coming into the bucket list for the first time. Arrow Exploration, Afentra and Southern Energy. A few headlines on each of those, please.
Yeah. We mentioned Tullow a few minutes ago, and in fact, Paul McDade, who used to run Tullow, has turned up at Afentra, which is a basic a team that has been put together to do deals in Africa.
Okay.
And particularly what is now called the African energy transition. Paul McDade is very smart, very good. I've always liked him. He's done very well, and took no blame for the problems that happened at Tullow. He was gone by then. But effectively, I'm delighted with the way that their first acquisition, which looks like quite a big lump of production and so on and exploration upside in Angola, and I'm convinced that they will do more. There's lots of acreage to be had in that part of the world. They're well managed, well funded, and I expect to see lots more from Afentra in the next couple of years. Next one is Arrow. Arrow is Colombia, really. They've got other acreage, but you might remember Amerisur, another word you couldn't pronounce.
Very well,
which was highly successful in Colombia, and they got taken out at a huge premium. Arrow are brilliantly run by a team who continually beat their targets. What I like to see is the way that they have a good exploration program and beat the targets. So I'm expecting plenty more from them.
And Southern Energy?
Southern Energy is basically southeast of the USA. It's big. It's quite a big company, and again very well managed. It's a producer of mainly natural gas, for which they're getting high prices. Prices there have come down a little bit, but they'll go back up again as the demand for LNG and so on picks up, because they are right next to the Henry Hub distribution area, so they get very good prices for their gas. Stronger production all the time, cash flows increasing, and they've got a target of producing the equivalent of 25,000 barrels a day, so that's very high.
Okay, so we've got 3 stocks you've called yielding stocks. Okay, I guess by default, therefore, they're less sexy. Is that?
Yeah, you could be right, but I mean, Diversified Energy is as sexy as anything in that list. It yields 12%.
Wow.
So that's nice and sexy. But that's a brilliant management. Rusty Hudson he's got a big team of really high quality people. Very, very low cost base in that business. But they continue to buy really big chunks of production. No exploration in Diversified, which is why you might think it's low risk. But that's why they can afford to pay such a big dividend. They buy it, they continue to produce it, they make it efficient. They've got a model of their own, which is almost unbeatable. I would have Diversified I'll make this point clear, as you know from the old days. I don't allow myself to buy any oil and gas stocks at all, so no one can say I was running anything that I had myself. If I had an oil and gas portfolio, Diversified would be in it.
What about Genel Energy?
Yeah, I mean, Genel's changed a bit in the last year. They've changed CEO. They've had one or two little disappointments in Sarta, which is the acreage again in Kurdistan. But there's nothing that beats the main part of their acreage at Torquay, which is a huge producer, and it makes from the company is very strong, it throws off masses and masses of cash, which they pay in dividends. So again, Ganel is another big dividend payer. But watch this space. I think they've got enough money in the M&A budget to buy something.
Right.
So I wouldn't be at all surprised. They've got they're drilling in Somaliland at some stage, but not quite up for it yet. So it'll still be about Kurdistan for the time being. But very well run. Throws off cash. Nice dividend play.
And finally, in that part of the portfolio, Sanlion Energy.
Yeah, I mean, Sanlion last time, we talked about it, is because they've got some two or three very big deals all working together in Nigeria. And it's taking, a bit like Savannah did, it takes ages to put these deals together. There's hundreds of pages of lawyers' work. But the key thing about Sanlion is that the management have made it perfectly clear that when this money starts to come through, when all the deals are signed, there'll be a huge influx of cash. And they have said they will pay out a huge amount of cash. And I reckon if you hit the timing, I don't think there's any doubt that the deals will work. It's merely crossing the T's and dotting the I's. So I don't think there's any problem about that. I think it's a question of timing, when and where you'll get the money. And on that basis, they could quite possibly be paying a 20% yield at some stage. And it's just a question of patience. Be there, wait, things are going fine, shares won't go down very much, and take advantage when the distribution occurs.
Okay, so wrapping up, final thoughts. Big picture, ESG?
I think ESG is going away slightly, partly because it's been deemed to be not quite the be-all and end-all for the fund managers as they had hoped it was. And secondly, because oil companies have come to grips with it very quickly. They've worked out that you need to have an ESG policy. You need to try and bring your carbon levels down. Jersey Oil and Gas will have amongst the lowest carbon levels. Kistos has pretty much the lowest carbon levels because on the gas side of it, in Holland they have, the platforms are unmanned. They're electric. Some of them are done, from shore. IOG has a very low carbon level. So people are moving towards, lower carbon levels, which are going to tick a number of boxes of people. We are still going to have oil and gas, fossil fuels, whatever you like to say, and needing these fuels for the foreseeable future. All we have to do, therefore, is make sure that they do hit the targets on carbon, hit the targets on not being, we don't. No one wants to have any problems on as Jason had on leaks and so on. So people will get all the governance things sorted out. The environmental things are being sorted out, at a pace. And as we found out with Petrotel, they have local problems every so often, but they make sure that they, whereas in the old days people would have said, "Oh, don't worry about it." Nowadays, they have a fund. They have a social fund at Petrotel, which profits go into that fund to pay for the local inhabitants and so on. So I think the industry is taking ESG on board, so they don't need too much more, booting from the fund managers who've got their own problems, if you ask me.
Yes. Finally, geopolitical risk. What are your thoughts for 2023?
Well, I don't think geopolitical risk will always be there, as we saw last year with Russia and the Ukraine. And we've found that, I think Iran is going to be a continued problem this year. They want to reduce the sanctions, and yet at home, Iran is not a pretty place. Right. So I would say that we probably won't have any significant increase in production from Iran for the time being. But I do feel that although I don't say forecast the oil price, I say where I think it's going to be. I'm confident that the second half of the year will certainly be better than the first half, and I'm quite positive about the oil price. And I think there are just reasons why. You're actually beginning to build quite a base, because on the downside, we know that OPEC in general and Saudi Arabia in particular are prepared to defend $80 or whatever it happens to be. we know that whether it's a good idea or not, sleepy Joe Biden sold a quarter of the SPD. So the SPR, the United States have a strategic reserve for things like wars and things like that. So this was a war against high gasoline prices. So during the summer, they've sold off hundreds of millions of dollars worth of, and so they're going to have to buy that back. So that's another bit of a base. So with OPEC, Saudi Arabia and Iran all producing a bit of a base in terms of production, and the final nugget is what the upside is, and I've been saying it for ages. I think the upside is still China. I think people,
as in the reopening of China.
Yeah, and lots of people just ignored it. It's not to be ignored. While they had the problems with COVID and they were locking down, we weren't getting any growth from the economy, which comes straight through to oil. No doubt about that. When they realised the only thing they could do was either produce a working vaccine or just let it rip, and once it's ripped, it's open, and they decided to let it rip, then we're already seeing signs that China is picking up. This is Chinese Lunar New Year this week, isn't it? And the borders are open.
Yep.
People are going there and coming back, and there'll be COVID and so on. But I think by that time that comes through to markets, it'll be positive for markets. So as a general, I'm
and
confident.
Inflationary.
And inflationary, yeah. And of course, in the States, we've got, we'll be on the run into the next elections and things like that. And of course, where everyone thinks the US will help is by increasing production. But the US aren't increasing their production anytime soon. I'm expecting to see there and thereabouts from, certainly the independents and the smaller companies won't do what they would have done in the old days. If it had got to $100 in the old days, whoom, they'd have produced every barrel they can. Right now, their banks are saying, we're not going to increase any loans. The shareholders are saying, we got used to these dividends. We want to have more dividends from the American companies. So the pioneers of this world, the Devons of this world, any portfolio should have them. And the bigger ones in particular, in the States, Chevron and Exxon and Conoco, they're all brilliantly managed. They're all going to pay you a decent dividend. And they've got parts of the big basins which will continue to produce and be profitable at much lower prices than now. So, but they ain't going to increase the production very much. They'll still do, 18 million barrels a day, more with internal production. And don't forget, with that production comes very decent associated gases, which go into LNG, which is exported to places like us. So the world will be wanting their gas.
Right, we've run out of time.
Gas, before I mention it, gas is worth about $170 a barrel if you convert it at the moment.
Happy New Year.
Same to you.
As always,
Thank you very much indeed.
Same time next year.
Why not?
You have a date. Thank you.
Bye now.